Welcome everybody. Today, I'm excited about a few different topics. This week, I in particular took notes and prepared a message and some content for you based upon questions that I received in the last really 7 to 10 days of different clients and potential clients wanting to talk about self-directing or the market. I'm not going to really go too deep into the market. I feel like there's been a lot of hype, obviously for good reasons, in the market of what's been going on, all the big major losses. Uh, so that being said, let me just kind of give a little background and jump right into this. So this will be recorded, and thanks for joining us today. The most important part, I think, of this call is typically towards the end, where we will hear and answer your questions that you've got. So feel free to use the chat box, put in questions you might have or something that might be weighing on you, or if I haven't, followed up deep enough into a particular subject or have not gone deeper into some of the questions that you might have, just let me know. And so today we're going to go over the really top 3 or 4. Actually, got 6 bullet points of things that people have brought up. I'm going to kind of dive deep into a few of them and leave plenty of time for questions and answers. Also, next week, just kind of, or not next week, 2 weeks from today. Really excited for those of you that are listening in here today. You won't want to miss this one. I am co-hosting. I'm hosting, and I've got, I should say, a guest. And my guest is my son, my oldest son, who does not work for me, who does a completely different business. He had started working for a friend of mine a while ago, 2.5 years ago. And we're going to talk about infinite banking and self-directing and how those things can work together, about controlling your money and the ins and outs of infinite banking, as well as self-directing your retirement funds. So to get started today, first and foremost, as just housekeeping stuff, I am not a CPA, not an attorney. You definitely can take this content and knowledge and information, go back to your CPAs, attorneys, or financial advisors, and get your own feedback and get advice from them on some of the examples I'm going to share with today. Not all these examples I share with you today are applicable to you, and it's one of the main reasons why what I try to do is I try to give you enough information so you then can schedule an appointment with my team, so we can see what kind of retirement account is best for you, or answer any kind of other questions that we can, and then you can go back to your CPA or financial advisor. So kind of just to kick it off, I started Horizon Trust Company about 14 years ago. What we do and what I do is my team, and we spend really pretty much all of our days helping individuals unlock and control their retirement funds. And I think the timing couldn't be better based upon what we are seeing in the market. This last week, there's been some major losses that many of you might have been hit, and we're going to talk about why self-directing is so popular and why there's so many people doing it. And I think this last week is probably one of the is a good reason enough for why people might want to be self-directing, taking back control of their money. So first, let me explain what self-directing is for those that are new. Usually about half the group of participants is new to self-directing, and half are seasoned and might have listened to me and my team before. Self-directing is simply it's a way for you to invest in different alternative asset classes. When I say different, alternative outside of the stock market, outside of your traditional regulated investments that you might be getting from your financial advisor, or someone that is licensed to be sharing with you particular type of stock market type returns, indexes, bonds, mutual funds, etc. And the list goes on and on. But in general, when you self-direct, you're saying, hey, I want to take back control, meaning I don't want to just see the list, the short list or the long list of all of the regulated stock market options. I want to not only see those options, but also invest in maybe something that's a little bit different. When I say alternative asset class, self-directing is primarily for those individuals looking to invest in real estate, precious metals, Bitcoin, businesses, and I'd say that's where the most part of our investors invest. There's a lot longer list of where you can invest. In fact, when I say real estate, as most of you know, there's a long list of what kind of real estate investments you can be investing in. I've been involved in self-directing for over 23 years. My first real estate transaction that I ever did that was part of a self-directed situation was somebody lent to me, or I should say partnered actually with me. Their IRA partnered with me to purchase an asset to then fix it up and then later sell it. Uh, uh, that was 24 years ago was my first transaction, and it was done with the subject we're going to talk about today. So again, for those individuals listening, if you have a retirement account, it be it a Roth, Simple SEP, HSA, an old 401k from a previous employer, or a 457 or 403b, any type of retirement plan. And if I didn't name one of them that you might have, most likely it's applicable to what we're talking about. But if you have one of these retirement plans or an old 401k or 403b from your previous employer, you do qualify to actually open up a self-directed retirement account. And it is a self-directed account is not a particular type of IRA. If you have a traditional IRA or a Roth or a Simple, that account would be transferred over into a custodian company like ours at Horizon Trust Company. And once it arrives at Horizon Trust Company, it is a self-directed traditional or Roth or Simple. Whatever it was where it's coming from, it remains the same. The same rules apply for contributions, distributions, the exact same rules. Those don't change for us as a custodian. We at Horizon Trust Company are regulated by the Banking Division of New Mexico. We are audited every single year by them. And our goal is really to help individuals learn this option and then use it to the best of their ability. When I say use it, people that understand how to self-direct typically are putting some really incredible assets inside of their self-directed. And why would they do that? Well, I'll give you a quick example. Right now, when you are investing, when I say you, some of you are investing outside of a retirement account into different business ventures or into a real estate transaction, an Airbnb, a buy and hold. You're using your non-qualified money, monies that are not in your retirement plan. So therefore, and you invest in that business with your non-qualified or regular cash or money, those profits and distributions go back to you personally. So therefore, every year you're going to get taxed on those gains. Or if you sell the asset, you'll get taxed on those gains. What's unique about self-directing is we open up really the opportunity for you to invest in these kinds of asset classes where you can avoid or defer taxes altogether. Now, when I say avoid, for those individuals that want to self-direct using a Roth account, and if you have a Roth or if you want to create a Roth, we can help you do that. You can invest in assets, and then when they sell, you can keep compounding that. And once you turn the age of 59 and a half, you then can start taking your money out of the retirement account. And what's great about a Roth is, let's say you start, putting away $6,000, $7,000, $8,000 a year in your Roth for 10, 20, whatever years, and you're investing it and you're compounding it. And so now you have $1 million or $2 million in that account. You can, after you're 59 and a half, pull all of that money out and pay zero taxes. Why? Because you did it with inside of a Roth account, which is after tax dollars. You've already paid taxes on them or on the seed. So this is one of the most powerful ways to avoid paying taxes altogether on all those gains. And so another example of that is, let's say I open up a Roth account or move money over into Horizon Trust Company. Once it arrives at Horizon Trust, you can convert it to a Roth. We can teach you or show you how to do that if it makes sense. Or if you already have a Roth, you can move it over to Horizon Trust. Now it is a self-directed Roth. Now, if I were to buy into an investment opportunity, let's call it a syndication deal, some kind of real estate deal where I buy into it, I have a small percentage, maybe I put $50,000, $100,000 into it. And my Roth IRA, let's say, has a 10% of the deal. When that deal pays off 2, 3, 4, 5 years down the road, my $100,000 turns into $250,000. All of that money, including the profits, go back into the Roth IRA where you avoid paying taxes now and also later. If you're doing it, if you're investing as self-directed in using a traditional, the great thing about a traditional is you get the tax breaks today, meaning you don't pay taxes on the money that you contribute to a traditional account. But because you don't pay taxes on those funds you put into a traditional account, it grows tax deferred. But then when you take out the money, you pay taxes on it. So that's when you're paying taxes on the crop on a bigger number. And so it's really up for you to, talk to our team, but then also your CPA to figure out which type of account is best for you. We have literally hundreds of new accounts coming on every single month, and we're able to teach and educate people about the different rules and which is the right kind of account for you. And then you again, confirm with your CPA. But what's the most powerful part of that is now you've got access to those retirement funds, your retirement funds, to invest in things that you know, like, and understand. And I think that's the most powerful part. I mean, if you look at this last week of what happened in the stock market, if you happen to be trying to retire this year, and your account is on the downward slope, you might not be able to retire because your $1 million now is $800,000. An extra $100,000 or $200,000 in your retirement account when you go to retire is a game changer for your future, and also for earning interest and living off your interest. People are living longer. Life expectancy is longer for individuals now. Therefore, you've got to figure out a way to build as much as wealth as you can while you're working. And then after you're done working, that you can figure out a way to potentially and hopefully live off the interest, meaning now your retirement account is invested in different asset classes in which it creates interest, and that interest then can be paid to you and you can live off that. That would be, I think, majority of what people try to do with their retirement accounts. So that being said, at Horizon Trust Company, our focus is helping individuals understand what kind of retirement account they have now, focus on then creating a self-directed account. And you can do that with the accounts I talked about. You can move over a portion of it or all of it. But you can move over and test out what I'm talking about, move it over to a company like ours. Now you'll have a self-directed account, and now you can start taking action and investing. For those of you that are listening today that don't have a self-directed or don't even have a retirement account at all, we help many, many people create their first retirement account, meaning you can put up your first 6, 7, 8,000 or more if you want to create a simple or SEP retirement account, self-directed retirement account with us. We help individuals do that. And so one of the things that, if you're listening here today, you're one of the individuals that are taking time and action. You're here. You're not out there. You're not just watching TV or what we're just playing. You guys are focused on educating and furthering your knowledge in this space of really taking care of your money. Nobody cares more about your money than you do. And so it's really imperative, if you want to have that lifestyle and create that wealth, to understanding your options. And this is, look, I've been involved. I've people, when I was in my 20s, people were my partner and lent me their IRAs, and I was able to then go out and massively scale my business and grow and fund different projects. And now I'm on the other side of it. Now that I've built up my retirement accounts, I'm now able to refer out or lend out, I should say, and partner out with my IRA with different people's businesses, and most importantly, real estate for me. It's been something that's been very, very advantageous for my retirement account, and especially times like right now when the market's weird. And when I say times like right now, I feel like there's always something happening between war and stock market things, or president, new elections, etc. The markets, I feel like I have no control over it, and the volatility, it just scares me. The ups and downs of the stock market don't give me comfort. And investing in asset classes like real estate, that's what gives me comfort. So at Horizon Trust Company, that's what we focus on. We help individuals do that. For half of you though that are listening, that are already clients of ours, thank you. Hopefully we've been helpful in you unlocking your funds, getting access to it so you can then invest in different places. So what I want to do is share a few things that I've seen or talked about or answered questions on in the last couple weeks, and then from there answer a lot of questions that you guys might have. that might have come up in the last week or two. And again, Alex is here as well, and Claudia on my team. So feel free in the chat box to answer or ask those questions. They'll come on at the end and give me the questions that are asked. Also, if you need to schedule an appointment, Alex will put a link in our chat box. You can click on that link to schedule an appointment. You can also have my email, Alex. If you don't mind, just put Greg Herlean at horizontrust.com. Feel free to email me your questions, your comments, your derogatory remarks. I'm joking. You don't really need those. I get those sometimes, but I'm not going to solicit them. But in all seriousness, absolutely email me. Me and my team will get back to you within 24 hours of any questions you might have that are applicable to you that I might not cover. Or that I can't cover because it might be I might need to know a little bit more information about the subject. So a couple things. First, I wanted to talk about and this is probably new for some of you, but one of the questions I got was how or can I borrow money when buying an asset with my IRA? So example, let's say that you're looking at buying a rental property, buy and hold is, let's say it's $200,000. And let's say your IRA only has $120,000. You absolutely can borrow. And there are several, I should say. There's several companies that lend to IRA owners. So what does that mean? First, let me take a step back. If you are purchasing a buy and hold rental or an Airbnb or some kind of asset class that needs leverage or debt, as you go through that process, when you buy it, the IRA is the owner and not you. So that's the first thing. So you cannot be the owner if your IRA is buying it. Your IRA is titled on the title. It'll say Horizon Trust Company, FBO, your name. And that puts you in control, your IRA in control of the title. That means your IRA is also going to fund the money associated to that. Now, it doesn't mean, nor can you, commingle your IRA with non-IRA money. It has to be only your IRA money. Then you'll have a tax liability and a problem it's prohibited if you start commingling IRA with non-IRA money. But let's say this property is $200,000 or so, and you only have $120,000 in your retirement account. In this example, there are banks that will lend your IRA the difference. Typically, they lend between 50 and 60%. The rate that I've seen lately, it seems to be around the 10% mark. It's not great, but it's not terrible. And as rates go down, then that will go down as well. But it's usually a little bit higher. Why is the rate higher? Because it's a non-recourse loan, meaning that you and your IRA cannot guarantee that loan. So if there's ever a problem with that asset, they can't go after you. So I don't think that's a really bad thing, nor can they go after the IRA. They can foreclose on the property and take it back, but they can't go after the IRA. So a non-recourse loan is that, where there's no liability to you individually or to your IRA. That's one of the questions. That came up this last week is can I borrow? And I would say that typically, again, it's 50 to 60% you can borrow. The rates, I'd say anywhere from 9 to 10%. And they love this kind of loan. If you think about it from the bank's perspective, these banks that lend, they like it even though it's non-recourse because they're only lending 60%. Because as you know, most banks will lend 70, 80, even 90% typically on properties. And so there's a little more risk, right? Because there's less equity in the project and in that property. So non-recourse loans is definitely a way. And if you are a client of ours or want to be a client of ours, in our client portal, investment corner, you can log in and you can see those different companies that will lend to your IRA. This is great and great news for those that now you're able to leverage. Just think about that leverage. Now there is some potential tax consequences when using debt, and that's something we can talk to you one-on-one about as we have our consultation with you. But what's great about it, if you think about this for a second, if you were to buy a home with your IRA for $100,000 and your IRA bought it completely, and let's say that it just appreciates, right? It's appreciating around 5% a year. So that's, $100,000, and then you're getting some rental income as well. So let's say you're getting some, 5, 6, 7% on your money rental income, net, maybe even 8%, whatever the case is. So your 100,000 is earning $6, 7, 8,000 in interest, and it's appreciating. So your 100,000 after 1 year maybe is worth 105,000. Okay. Now, if you take that $100,000 and buy an asset that is $200,000 in value, but now you're borrowing a little bit of cash, half the money. When that property goes up 5%, that 200,000, it goes up 5%. It's actually then going to be what worth? 210, but you only put $100,000 in there. So your $100,000 in appreciation alone has gone from $100,000 to $110,000. Still get cash flow. And so that cash flow is going to still get you probably between 5 and 6%, 7%, because there's some debt coverage potentially. And so now instead of making maybe a 10 or 11% on your IRA, you make 13, 14, 15% by using leverage. Now, that might not sound sexy. And I think that's probably a conflict that and a thing that probably bothers me the most is my goal and my hope for our clients is that you and your monies with us, you earn better returns than where you were before. So I am not the get rich quick guy. I'm not that guy that's going to say that self-directed, you're going to do it and you're going to make 20, 30, 40% per year on your money. But I do think it's very viable. And I think it's it's not too hard to do to instead of making maybe 7 or 8% in the stock market over a 5-year period, that you can make 11, 12, 13%. And if you do that math, 3 to 5% more in interest every single year, compounded year after year, you can do that math. If you go to our website, Horizon Trust, at horizontrust.com, we have a calculator. And maybe Alex, you can put that link in the chat box as well for me. But there's a calculator for those that want to play around with this number. It's very cool to start doing that. What's the difference of making, $100,000? You start with $100,000 and you put, let's say $7,000, $8,000 a year away, new contributions. And then let's say that you're earning 8% compounded compared to 12%, a 4% difference. That 4% is hundreds of thousands of dollars difference. And so, especially over a 20-year period. So play around with that calculator. But the goal here is for you, if you want to prepare and create true wealth and true passive opportunities for retirement, you need to take control of your retirement funds. You need to open up a self-directed IRA account and invest in what you know. And when I say you need, typically I'm like, hey, look, this isn't for everybody, because it's not. But what I've learned, I've done this long enough that those that are listening to this, that are tuning in, that are knowledgeable and taking action, this is something most likely for all of you that are listening. So non-recourse loans, using leverage is a great thing. Another thing that I want to share with you guys is about Roths. I might have mentioned this once before, but it's come up a few more times. I don't know if you know this, but when you contribute to a Roth, let's say if you're able to contribute, you contribute $7,000 or $8,000 a year. You can do that every single year, and let's say after 5, 10 years, you've contributed. If it's 7,000 a year, 70,000. It does not matter what age you are if you need to pull back funds out of your Roth account, as long as it's only up to the amount that you've contributed into that Roth. So let me just say that one more time. If you're an individual that has a Roth account and you've contributed money into it, let's say it's $7,000 a year for 10 years, that $70,000 you can pull out at any time without penalty. Now, you can't pull out the interest. Let's say that over 10 years, most likely that $70,000 is probably worth a few $100,000. You can only pull up to $70,000. And I think that's kind of comforting and important to understand, because some people that listen, or that they're concerned about opening up a self-directed IRA, they're like, hey, right now is not the time for me. I need to wait. I might need this money. Well, let me tell you, open up the account, fund the account. If you end up needing part of that $7,000, take it out. And then just, keep just a portion of it in there. And then you can keep your profits in there. So that was another question that came up, I think, in this last week that I thought that was important. Interest rates. I think that's probably one of the points that I think a lot of people have been talking about. They want me to tell in the crystal ball situation what is going to happen with interest rates. And so I'm not going to, in fact, I'm not a big timing the market kind of person. Why? Because I'm typically in real estate, and interest rates don't, yes, they affect my deals, but end of the day, I think I've never been in a period in my life, even in 2009, where it wasn't the right time to buy real estate. Now, that I didn't say that the real estate market always goes up. That's not what I said. I said that there's never a bad time to buy real estate. People have asked me a lot lately, I'm going to wait. I'm going to put an offer in towards the end of the year because I think the rates are going to go down. I think the rates are going to go down. I'd bet money that the rates between now and end of the year are going to go down 2 or 3 times. It's going to be anywhere from a half a point to a full point. I would bet money on that. And but yeah, I'm not telling you to bet money on that. That's telling you what I would do. But that being said, I'm not going to pass up an real estate opportunity today, waiting for a rate of return to change in September, October, November, December. Not going to do it. And so why is that? Because I'm trying to buy deals today that cash flow or break even with today's rates. And they're out there. And I would think that should be one of your goals. If you're using your IRA to buy and you're using leverage, if you can break even in today's higher rates, just imagine what happens 1 year from now as you refinance and get these lower rates. You'll be cash flowing funds out. So that was probably one of the other bigger comments that people have asked and reached out to me about, and they want to talk about interest rates and when's the right time to buy. Buy. That's the first answer. Buy. The second thing they ask is, where should I buy? That's one of the top questions people ask me. And again, we don't advise. I don't give you investment opportunities. That's not what we do at Horizon Trust. But people do, they like to hear where I'm investing, what I'm doing. And the answer is typically invest in markets, where you have relationships. And my son doesn't buy in Florida. I mean, in Florida, he does buy in Florida. He doesn't buy in California. Well, there's some obvious reasons why he wouldn't buy in California for him, and maybe for me and for others. The price point it's a lot harder to buy in cash flow at some different values in California. But in Florida, you can buy, on the Gulf Coast or even on the East Atlantic coast for half the price in some cities of California, or even more than half the price. And so then it cash flows from a rental perspective. So buy in areas that like, understand, invest in what like, and understand. That's the whole point of self-directing. It's why I got involved in it, and it has now truly changed my life and so many thousands of other individuals at Horizon Trust Company. So those are some of the questions I got. Buying, interest rates, where the stock market's going, not where the stock market's going, where the market has been with the stock market, with the ups and downs, Roth account, non-recourse. The only last thing that I'll bring up before I go into some questions to answer here, so feel free to put any other questions you guys, I think I've seen 1 or 2 I'll go back to, is LLCs. This is probably the area that we've spent a lot more energy in the last year, is individuals that have an IRA, a self-directed IRA, and they create a checkbook LLC or an IRA LLC that we help them set up. We can establish it. And that new LLC is owned by your IRA. We've got lots of people doing that. Their IRA then would invest in the LLC that you are the manager of. That LLC then can take action investing in different asset classes. What's great about that is the flexibility of different expenses that might come up with these asset classes. Let's say it's a fix and flip or even a rental buy and hold. There's taxes and there's utilities and management fees, etc. And it's easier to use your LLC with wiring and checkbook capability than it is to request funds from us at Horizon Trust every time. I would say that either one works. You can still work with us on that. It just takes us a day to process. That's probably one of the greater benefits, I'd say, working with us at Horizon Trust Company is our speed and our team. We truly care about your experience and helping you push through the documentation to make sure it's done accurately. So that's it for me as far as the things that came up and questions that came up that I wanted to share today. And so I want to go to some questions in the chat. I think I saw at least 1 or 2. And then, so definitely feel free to put some questions there. There's a link there to schedule an appointment. And And really, I hope those that are here, you're here with me 2 weeks from now. It's going to be great having my son on here, hearing his kind of battle wounds and what he's done so far in helping. I think he's helped. I don't know. I know it's hundreds, if not 1,000 different individuals open up a IBC policy where he's talking about insurance. We've also had other guests on here with us at Horizon Trust that have talked about IBC. Lots of people are doing it. I'm having him come back rather than some of my other guests. One, because he's now done it for a bit. He's helping 50 to 100 people, not 100, 50 to 70 people every single month. I would now for over a year. I feel like I'm now comfortable with him talking about this to our audience and to our people. So anyways, you won't want to miss that. So that being said, Alex, or I can look in here. I don't know if Alex, you want to chime in with the one or two questions I saw come in and answer those that we have. Or not. Let me see if I can go here. All right.
Sorry. Here I am.
No, you're on mute. All good here. Let me see if let me see. Oh, I think there's just one so far here. So Kiki here says, how do you borrow against an old 401k? Or must you convert it first? Great question, Kiki. So if that's how I pronounce your name. Yes. If you have an old 401k, you first would convert it to a traditional. The no taxes are paid. So let's say you open up an account with us at Horizon Trust. If you don't already have one, you'll move over that old 401k, move that 401k over to us at Horizon Trust. It will then be a traditional self-directed IRA account. And as it's sitting there as a traditional, uh, then you can borrow and we can help you. We'll line you up with two or three contacts that do non-recourse lending for you, so you can go and use that leverage. So yes, you would convert it. That would be the first step. And again, once again, for those of you that are converting, or even if you're not, well, let's just say you have a traditional account. When you move over, transfer or roll over your retirement account to us at Horizon Trust, there is no taxes paid. There's no penalties and taxes paid. It's a transfer. It's a rollover. So those funds, a check will be written from, let's say, Fidelity or wherever your money's at to Horizon Trust, FBO, Kiki's name, and it'll be really good. So very easy. So yeah, no problem. All right, what do we got here?
Looks like the questions are coming in, Greg.
Again, you can schedule an appointment. Alex has put it there if you'd like to schedule an appointment. What is an IB? I'm sorry, B as in boy. Infinite banking concept. IBC policy. Malcolm, yeah, stay tuned. I don't want to get too deep into it. My son will probably do, not probably, will do a better job. I've got about 8 of these policies. It is a way of unlocking your money and controlling it and being the bank. I can go deeper into it, but I feel like you want to be on this. It's really going to be dynamic and very helpful for those of you that are wanting to control your money rather than having a bank control your money. So great. Let's see here. If you have a piece of real estate already in a self-directed account and decide to move it to Horizon, does it need to be retitled? If you own that real estate in a self-directed account with somebody else, some other competitor of ours, yes. It's a simple thing. It's not a problem. You would move over your account to us, and then you would retitle that asset. So we help you with this, by the way. And so our team will help you with that process, the documentation. So let's say that it's titled in the name of XYZ Company, FBO, you, Malcolm. Or, I'm sorry, was it Malcolm? Did I miss it? James. XYZ FBO James Davidson. You would then change that to Horizon Trust, and then we'd have to send out the documentation to retitle it. And it's a simple process, a document that we can help you fill out and submit to a title company or quick claim with the county and change that. So not hard, not a problem. Good question. What about IRA with my current employer? That is the only IRA I have. Anna, so yes, you can, if you have a IRA with your current employer, you can move it over. But if you have a 401k with your current employer, which is most likely what you have, you cannot move it over to a self-directed IRA account until you have left there. If you've let go or you leave, whatever the case is, that's when you can move it over. So you or your spouse or significant other can move it then. One thing that I didn't mention, I'm not going to go too deep into this as well, is this is a great place and a great self-directing is a great place for you to go talk to individuals to help you fund your business. If you're looking for funding for your next real estate deal, if someone has an IRA and is sick of the stock market, you can get them teed up with us at Horizon Trust Company, get their account set up, and they could be your lender, your next lender in your next deal. So yeah. Can a self-directed IRA with an LLC use a conventional loan to buy an asset, such as a rental? Not conventional per se. It can be a 30-year amortized loan, yes, Carlos, but it cannot be a recourse loan, which most banks, it's a recourse loan, meaning you personally are liable for that loan and its payments. There's special banks, and again, we have those relationships. As a client of ours on our portal, you can log in, and there's banks that will lend to you. It's like conventional. The rates are a little bit higher, and you're not having to sign as a guarantor. That's the biggest difference. Would you recommend rolling over a traditional 401k to a self-directed IRA or a self-directed 401k? Yes, absolutely. That's what we're talking about today here, Carlos. So yeah, if you have a traditional 401k that's old from your previous employer, you can move it over to a self-directed IRA. So it'd go from a 401k to a traditional self-directed IRA with us. Or you can set up a self-directed 401k. If you are a business owner, sole proprietor, and you have a business, we can help you set up a self-directed 401k for your business, which will allow you to fund or contribute a lot more money. Huge benefit on a self-directed 401k if you're trying to put away money. How fast can a Roth be transferred to your account, your IBC? How fast can a Roth, Malcolm, a Roth to your IBC? We're going to talk about that in 2 weeks, but it's usually the other way around. Usually people that I've seen will create and open up their IBC policy, fund it, take a loan out against the money they've put in there, and then they'll use that to put into a Roth. And so we'll talk about that in a lot more detail. Good question. Good question. Brian, can you loan a percentage of your self-directed IRA Roth, like 25%, and then outside of that, self-directed IRA, you provide 70% and make like a JV loan to a borrower? Interest payments would be separated going back. Yes, you can do that as long as it is exactly. Typically, the ideal scenario is that you or your IRA does not own more than 50%. So in this case scenario, it would be 100% loan. It's better that would be less than 50%, but not necessary. So yes, as long as it's exactly the same pro rata. So let's say that you did exactly what you just said there. You invested $100,000. Then 25% of that interest needs to go to your Roth and 75 to your non-IRA. So yeah, you can do that. Can you force a split in a current 401k at your current employer? You cannot force the split. Yes, you can. You can force the split and by quitting. And I'm not recommending you quit your job, but the only way to get your 401k from your current employer is if the plan allows for it, which most likely it's not, or if you leave there. So yeah. Roger, I have a little less than 50K in my account with you for a few years. It's not growing and I need to invest in real estate. Any suggestion on where to invest? Anything with Horizon? Roger, well, look, as of this week, it was probably a good thing that it was not in the stock market, but obviously the last couple of years has been pretty decent in the stock market. So that being said, I've also have idle money available in my self-directed IRA often because it comes and goes. I would say the best answer to that is go to our investment corner, Roger. I don't know if you've been there yet, but our investment corner, all of our clients get to see different kinds of asset classes and what people are investing in. If you're not aware of that, contact us or Alex. You can put the link maybe in there as well for the investment corner. You can't log in unless you're a client. So email us or email me, Roger, Greg Herlean at Horizon Trust. We'll get you the login information or Alex can send it to you to look at the investment corner. The investment corner, just full transparency, is a place where you can do your own due diligence on where people are investing their money in different alternative asset classes. We have oil and gas in there, different funds in there, real estate there. We don't get paid. For any decisions you make. In fact, when you click on there, you're going to leave our website and learn about these different things. We do like to, put different opportunities that people that are clients of ours that have had success up there. But look, there's always risk, right? So do your own due diligence. But I think, Roger, you'll find actually some good ideas, even with $50,000 for sure. Do you have a list of lenders that are familiar with the process to use self-directed and LLCs to borrow money to invest in real estate? Absolutely, Alice. Again, in our investment corner, there is non-recourse lending. So we do have those relationships that are very familiar with it. Yeah, good question. Awesome, Alice. Thank you. You're going to be working with Brandy. A lot of our clients have worked with Brandy. She's been with me for the longest employee, actually. You'll have a great experience, Alice. And look, I'm always here for you as well. You got my email. Ask any questions you got. Well, I'll get back to you as well. And we'll help you through this process. It is not hard. It might seem a little bit, it's just new and different. This has been around since the 70s. And I think that's one of the things that people like, oh my gosh, why haven't I heard about this? This has been around for a long time. Yeah, most likely you don't know about it because your advisor doesn't want you to know about it, or it might not have been right timing. You might not have been spending time and energy on your retirement account. And if you're not going to, do due diligence on a real estate deal or on some kind of business transaction, it's not for you. You've got to do your own due diligence for sure. So thanks, Roger. Alice, perfect. Great. Well, thanks for the questions today. I really appreciate and humbled by really how quickly we've grown. Our team is here to serve. Alex has put in here how to schedule an appointment. Absolutely work with us and we'll answer your questions, help you get your account moved over, you or your spouse, or help you get your kids' account set up. If you want to set up Roth accounts for your kids, we'll help you do that as well. It's never too late to get them going. So look, I've been doing that. I got 5 kids. I got kids that have IRAs. I've got my own retirement accounts. I'm like the Rogaine hair commercial. I do exactly what we're talking about with my own retirement accounts. And so take back control of your retirement money. Nobody cares more about you than you. Don't be caught in what happened this last week in the stock market with these volatile stock market. Invest in things that you know and understand. And so, yeah, I appreciate it. Thanks again for listening. Thanks for being with us. Be with us in 2 weeks. I know you'll have you'll get some great feedback and great answers to questions on IB as in boy, IBC with my son talking about it, as well as Rise and Trust, self-directing. Thanks, and have a great weekend.
Hey, thanks for watching this video. Hopefully you enjoyed it. There's lots more great content for you to learn and enjoy and apply to. And so anyways, click on the link below and listen to more videos or set an appointment with us. We look forward to hearing from you and also helping you.